This is a small practice run for the trades that could have been taken on Friday, which is the 13th of Jan. So the setup that we all had one day prior, that is on a Thursday, which was an expiry, was this. So Thursday was reasonably a good day, if you see, and we had a double bottom formation on that particular day, and it was a successful double bottom formation because the price actually went up. But since the test was not complete, it missed by a few points. You could say that there was just one leg up, because this is a pullback from a leg which was already up. Perhaps this leg up and down, and now this could be the second leg up. You don't know how big that leg could be. We've drawn supports and resistances based on the previous data. So it's a very simple line, one drawn here to consider this and this, validating the double bottom, and on the top validating these double tops, maybe a slight triple top here, and then the other resistance was drawn here, where there was some amount of resistance being shown. And similarly, when you look at a 15-minute time frame, and now this is this was as on the 12th of Jan. So we have the data for the 13th of Jan, but I'm just showing you how 12th of Jan looked so that one could be better prepared for the 13th. So as on 12th, you could see that there was a wedge pattern being formed. Now here, there could be two possibilities, right? One is that this particular push down is a failed push down because of this particular double bottom formation. So then this is not a complete pattern when it overshoots and then you get a good move up. So here there are two things that are working against the pattern's breakout, a wedge breakout and a double bottom breakout. One is that the double bottom pattern is not complete. This is not touching, overshooting, completely testing this particular price, which means that you have one leg up. How big the leg is, we don't know. Secondly, when you're looking at a wedge pattern formed on the 15-minute time frame, you are not getting a small spike here, which would have been the classical wedge breakout pattern. After three pushes down, it could break out on top. But this again is not happening. Then one could speculate. Maybe it could come back again, test this, and then spring up, right? Or since the move is already, you can see probably 60 to 70% of this particular move, the chances of that happening were very less, right? So now let's look at 13th. What happened on the 13th, and probably try to look at the kind of trades that we could have taken on the 13th. Right. So on the 13th, we had so this is where the 12th ended, right? So this was the end of the pattern, and then you had an immediate sell-off once the day started. Now that is in sync with this being a double top. Again, this is a double top formation on a smaller time frame, and then you get a sell-off, and then immediately you had a buying frenzy towards this. Now this may look small to you, but let's check how many points they encompass. This 198 points, which is pretty good. So can we have any logic here for this particular move up? Yeah, the logic is that you have a spike down, right? And most of the times when you have a quick movement in any direction, it is quickly either reversed in the opposite direction, or it just continues moving. So now after this big move down, there was a quick buy up, nullifying this breakout towards the downside. And now what that did again was it symbolized 3 pushes up, which was the end of the up move. So this leg, this is the pullback section of the previous up move, and this was the end of the up move, right? Because this overshot this, and this was the first leg of the down move, a very good pullback, and the second leg of the down move here. I think this particular down move ended right here. So that was pretty strong. This second leg had 2 legs within it. How do we trade it? Again, this is 3 pushes up, 1, 2, 3, or we could consider it to be pullback and up. So yeah, 1, 2, and 3. These are the 3 pushes up, and then you had a very good down move. This could be a very good signal bar, and this could be your entry bar. A sell order could be placed somewhere here. The stop could be placed somewhere here, and once the entry is triggered, you could bring your stop to break even and let the price run. So now again, when you look at this particular pattern being formed, it's very difficult to know from where it would reverse, because here there's no supporting signal bars or supporting patterns on the left hand side, apart from this, which is one area of agreement. But I think to account for many such areas of agreement would just make your trading very complicated, and you won't know what to expect, right? So you can see this was one area of agreement which was there. So price was expected to be stuck here for some time. How do you trade it? Here, since we already have the bars in front of us, it is easy to to plan and decide where it would go. But see, counting of legs is not something that is easy, and I don't think we should spend time on counting of legs. You can work on approximation, because no matter what you think, every leg is a part of a bigger leg, which is a part of an even bigger leg, and that cycle just goes on and on. And even those pushes that you calculate, if it's a first push or the second push or the third push, so how do these pushes develop? So for the first push is actually the pullback of the previous leg. So say you're having an up leg, and that up leg has a pullback which is down, okay? So that becomes the first push, and the down leg will have 2 moves down. So that would be a second and a third push. So that indicates that that particular leg is over, and then you're going to the next one. So those who are kind of accustomed with this would probably appreciate that this is the end of the down leg from here, right? This is A, this is B, and this is C. So this is a classic ABC move. Along with that, what we have is another area of support here. You could see good support being generated here at this price. So you could also anticipate a move up from here. So now, again, I don't want to count legs here because it just becomes counterproductive. We could just call this a good sideways market for the time being. Now, whenever you have a sideways market, this is an area of agreement where the buyers and sellers are in favor of the current price till there is an agreement on what should happen next. And ideally, these areas of consolidation or mutual respect is a continuation pattern, which means that after this, it would be reasonable to say that the price would go down. Again, when you see this has made a higher low here and a higher low here. So again, this is part of the move up, right? So then whenever there is a move up, you probably are thinking that there should be a pullback towards the down. But this was also a triangle formation. Now, a triangle formation is something that here, it's something that you should be very careful about, because the breakout could be towards any direction. It could be towards the up or towards towards down. Ideally, you would count on it being, if it was a sideways market without this kind of compression, you could have probably counted it on going down. But here, it would be best in case you take both a call and a put option if you're an option buyer, and then place a buy stop order here for a call option, right? And similarly, you can buy a put option and have a buy order here. Now, if you're a futures traders, you can have a sell order here and you could have a buy order here. Either one could get triggered. And this particular breakout did not fail. So there was a breakout from the triangle pattern. The price continued upwards. And here you could again see a good resistance happening. But then this and this were quite apart. So, there was some amount of certainty that you can't count on a reversal. But then whenever you see a candle pattern like this, you're probably counting on a reversal. And, many shorts place your order right below this candle. And they get trapped. So once they get trapped in that particular fashion, the market actually reverses back up. So again, this should not be considered by most as a very good reversal pattern, simply because you are not getting a proper test of it. Either the bearish strength should be so much that they don't allow the bulls to take the price here, but that is clearly not the case. The bulls have exerted their candles. They have made very strong momentum candles, and then this should not be considered as a reversal. Even live at the market, I think this is very common for people to realize. There were some bears that got trapped here, some shorts that got trapped, and this formed a very good bullish flag. So this particular flag here. So you get the message. So this is a good bullish flag, and you could easily count on a measured move up. So this is the strength of the flag, and you could see this is an approximate measured move up. So then this is easy pickings. This is 220 points up, and this 220 points up, I don't think that many of you would have got. Many of us, I'm sorry, would have got. Simply because it is very difficult to anticipate a move up from here, especially since this is a triangle pattern, and this was all not a very good double bottom or any of a known price action pattern for us to work on, right? So till here we are sitting pretty good. Now when you look at the 15 minutes chart, so we were talking about this particular area now, okay? So now this area is an area where people would have thought of having a reversal, because here price had initially reversed from here. So many, including myself, were looking at shorts here. But then, I was of the opinion that in case we needed to take a short position, it needed to slightly shoot up, right? Give a small fake out and ensure that the move up is completed, the leg up is completed. Then we can go with with strong shots towards the bottom, probably testing this low. That was the plan. But then what the market did was it lost momentum once this flag was over. Perhaps this could also be called as a flag of sorts, small flag with this as the pole, and then again it went up, and then there was a sell-off here. Now again, there are people who might have taken aggressive shots here, right? And there might have been a lot of people who have taken aggressive longs here, thinking that the market will now go test this extreme. Now, which is this extreme? This extreme is marked here. So this is caused on the 23rd of the 9th of Jan. So the extreme caused on the 9th of Jan, 6th of Jan, and the 10th of Jan. Many would have thought that the market would go here and then probably show a pullback down or a reversal down. But the pattern is still incomplete. Now you can look at the time. The time was around 2 o'clock. And then you had a move down, very strong momentum bar down. Now these kind of things are very tricky, and what I did was I was confused firstly, because this was a fake out that I was looking for. But then the volumes just weren't there. When you look at the futures chart, the volumes for me just weren't there for this to be a huge breakout of sorts. So then I thought it's better to wait and watch. And then even this particular momentum up came with less volumes. Even though this is a momentum candle, this is a momentum candle. If you look at the delta values on an order flow chart, this was very, very nominal. It was not the general 40,000, 45,000, delta to give you that, Arnold Schwarzenegger type breakup. But that was not the case. This was pretty meek, and then I came here, and then I was certain that people are taking shots here, and it's not a bad move if you take a short here. But then once you have your entry bar, and once you have your signal bar, your entry bar would be here. So even if you're capturing the move, it is 151 points on the spot. So not very exciting. I was looking at a second entry of this breakdown. But however, what I did was, as soon as I saw this huge bar down and a small bit of consolidation, I took a safe bet of placing a long order above this bar, because there would be many shorts in place, around this bar, the stop here. So because this is a momentum bar, so what I did was, so you can see the shorts getting trapped. I'll just zoom in for you to understand that. So you can see that this is a big negative bar. People would have placed a short here at this level, and then what happened was the market actually came and trapped them in, and it went back up, right? And you could see, so the candle started here, came all the way down, trapped them, and went back up, right? And probably came down here, or however it is it went. So let me just again speculate. So the so this being a green bar, the price has to start here, right? So yeah, so this is the red candle ended here, and then the green candle started here. I'm sorry, So it was not that it came down and trapped. So it anyways trapped those people, and then it went all the way up, and then it came down and closed it here. So this was the open, this was the close, this was the high, and this was the low, right? And these guys got trapped, and now, you know, if they were smart, they would have escaped here. When the market opened here, after closing here, it opened here, it probably went up, came down. Now here, I think, do we have long? People would have gone long here. I don't think they would have been stupid. But then, yeah, you can look at the candle that came after. So this is again one tick over this particular candle. So these guys, yeah, there are people who put long orders here, and they didn't get triggered. But instead, the price fell down. Right, so closing here, went up, did not trap them, and then closed here. Right, so these shorts here would have probably been trapped. The stop losses here. These longs are not trapped, they are stop losses here. Okay, so are these longs trapped? Because see, this tail indicates that these sale orders were executed, you know, or the stop loss was executed. So did they get trapped? They're hard to say. I mean, it's the same unless there are people who entered at market looking at this go up, thinking that this is a pullback. Hey, let's go back in up, and you know, with the stop losses here, because this particular, you know, tail is indicative of these stops being run. Anyway, let's not waste time there. So market closed here, and again, you know, those guys who have taken shorts here with a stop loss here, we can see that their stops, you know, the market starts here, so they are already in the market, and the market goes up and runs their shorts. And even more people, you know, here who didn't get exited here are, you know, even their stops get run at this particular level. So this probably explains this move up. So ideally, when you see a sideways market, it is best not to take any position. Again, these are ideally continuation patterns, but the market can take it anyway. So any way that it wants to. Going back to a 15-minute chart, here you could see that in the bigger scheme of things, this was nothing but an up move with a small pullback. Now, where will the market go from here? That is a good question. It could go either up or it could go down. The kind of trades that we could have taken on this particular day was a good short here because of the wedge pattern formation. Continue till you got a very good bullish reversal signal bar. You could have got out here. Once you see the triangle pattern, you could place an order on both sides, up and down. Okay, if it goes up, then that entry gets triggered. If it goes down, then the down entry gets triggered, and then you can see a bullish flag which is forming in a 5-minute chart. So once you see the bullish flag forming, you could again go for a measured move up. That is the size of this. This was a measured move up. You could, exit here. This could be an area of short, but wait for a second entry in case the price again comes tomorrow to test this, and if it's going down, you can take a short entry here, or if not, if it's going up, you can calculate on having a short entry somewhere here. I've always said that hindsight vision is 20/20. Once things have happened, it is very easy to sit down and think of 1,000 ways of how you could have handled it. It's, you don't need a lot of brains to do this, but it is important for you to be prepared the next time you have these patterns in front of you. When you're living these patterns, you'll be able to tackle them only if you practice. And this is what is called by practice, going back to the charts, again seeing what you could have done. And there is a replay function also, so which people can press and see if you can navigate the day. Right, that's it from me for today. I hope it was of some help to you guys. I'll see you soon.